Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, December 29, 2022. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, here's what we've got. This is likely going to be the last video of 2022. There's one more trading day left. We're into the New Year's holiday. We're going to be fresh, in uniform, ready to go for 2023 next week. Let's do a where are they now? Let's do a here's the last video review as we always do them, assessing the market for what it's done, what it's telling us at present. They had a nice little rally day today. We were talking about a cycle low time frame that is really right now. We're in the zone for a short-term cycle low. The media will start talking about the tax loss selling is done and all this stuff. It doesn't matter what they say. We were looking for a cycle low. It's going to be, if it continues, another bounce in the downtrend. That's it. No more, no less. So where are they now? Well, they're still in the bearish, flaggish kind of pattern. They had a move lower, and they've been going back and forth in this range for about 9 trading days. Will the 10th day break out on Friday? Will they break out and over 385? That's what that line is essentially. And into the convergence of these moving averages. Those moving averages, that convergence is magnetic. If price begins to get close, it's going to get pulled right up into the convergence of those moving averages. Can't say it's going to happen on Friday, but as long as they stay relatively bullish and we're in that short-term cycle low scenario, that would be the logical target. The convergence of these moving averages, the 20, the 100, and the 50 right there. And that will be, as they say in the trading parlance, overhead resistance. If there's a flip around in the southern direction, you wake up Friday, you're interested in trading the market, and they're trading down, what do you look for? Below today's low is trouble for the bull case, obviously, and they would begin to then test yesterday's lows, the lows from over here down around 375 and lower. The same thing we discussed last night on the southern side. Remember, they're just in a channel. Even though they had a nice rally today, they're still in a channel. It doesn't change a damn thing. We always have to have the bigger picture in mind. Not the biggest picture with every analysis, but the bigger picture in mind. What are they actually doing on the daily chart? What are they doing on the weekly chart? Well, as of now, all they're doing is treading water, going sideways for the second week in a row. Nothing more, nothing less, hence the range that they've been in going back and forth. Looks different on a weekly chart than, of course, it does on a daily chart. Let's insert something a little more important. Lazy swing traders were buyers of Tesla between 112 and 108 on Tuesday. We'll call it an average price of 110, and it was bought right there. Now, I'm going to make a separate video that explains exactly what was in this trade. What did I see? How did we get the numbers? How did we get the spot? What charts did I use? What method did I use? How did it become a full stack, and I should say a hell of a full stack opportunity? The kind you're licking your chops for. Now, it doesn't look like much on this chart, but if you do the math, let's just say the average is 110. It's 121, 122 today. We had options and we had the stock. Trader's choice. They got to choose whatever they wanted. In 2 days, you got the late Christmas present. Nice trade. It's not over yet. It just became a risk-free, emotionless trade. And again, out of the trading parlance, and we'll do this for the last time in 2022, how do you like dem apples? About inside the numbers, we're going to do this one real quick. It was an abbreviated session today. Read the notes, pause the video, all that stuff. Here's what I want to show you. It's very simple. Market started pushing higher during the pre-market session, so we had an alrighty then. And we know what the target is. You guessed it, back to 383 to 383.40. So what do we do with that information? 9:28, 2 minutes before the opening bell, Jordan and the members in the live room picked this trade up. Here's what it said. On a quick drop, 379.30 is short-term support. Below that is 379. We'll call it a short-term zone of support. Below is not good for the bull case. 379.30 to 379. We think better in pictures. Here's a 5-minute chart. Right of the vertical is today's activity. The opening print today was 379.66. They ran down to spike below 379.30. The low of day was 379.08, right in the zone, turned around, had a rocket ride back in the other direction, which also turned into a Thursday, day before the last day of the year, floater operation. Nice trade. Apples. Pause the video, read the notes, go back to the chart to double check the work. That was a short day based on the fact that after the morning trade, they're going to have a floater operation the majority of the time leading into a holiday. There's a lack of participation in the market this week. Doesn't mean it doesn't move. It means there's a lack of participation. You want to take your money and run. What's going on over in Camp IWM? My favorite market leading indicator was up 2.5% today against the S&P. That was up less than 2%, leading the market. We take a look at that, we note it, we file it away. It's a puzzle piece where we're looking for a bounce. We're looking for a short-term bounce. This is more evidence that it's more real than not, at least in the short term. Same bearish flaggish pattern, but there's nothing that says they can't shoot them up into the moving averages, into the 20, or even the convergence up here at 179, 180 of the 150 period moving average. They'll fill a gap up here, make it look like everything's fine, let the bulls hop on board, we're going to have a better 2023, and then they'll pull the rug out again. That's the way it works. What about the folks down at the transportation department? Nice little up day, but nothing special, on par with the S&P for the most part. Same routine, they're just in a range. And they will be in a range until they break out of the top or the bottom of the range. Until that time, all they did today was test the top end of the range. So therefore, there's no change from the recent analysis. Nice little rally today, up 2.5% for the tech folks, the QQQ people. Oversold condition, little bit of a squeeze operation, short covering at the end of the year. Who knows what it was? Whatever it is, you really don't know. It's just a hypothesis of what it might be. All we need to know is where price is, what the chart looks like, what the pattern is, what the numbers are, what's the market doing at present. Is it able to get over a certain place that opens the door for another place, or is it getting below a place that opens the trap door for another place? On this one, as long as the bounce continues, they should get up to at least, and write this down, put it on a sticky note, 270. Frankly, they should get a little higher, at least 270.50. Put that on the sticky note, cross out 270. XLF, we talked about this last night and before. The chart looked slightly different. It wasn't as in bad of shape as some of the others. And here we are already almost into the convergence of moving averages, the 20 and the 50 period moving average right around 34.30 and change. This has got 35 written all over it. Put that on the same sticky note as the other one. Same routine for the semi folks. Smash Mouth up over 3% today. Again, another proxy for the tech space. So when you see everything going up together, it's the rising tide lifts all boats. It's the all the same market scenario. But what we don't have is divergences. When we do have divergences, you look at it and you say, well, maybe it's not as it seems. Right now, we were looking for a bounce, so it actually is as it seems. If it walks like a duck and it talks like a duck, it's going to be a duck the majority of the time. 208 to 209, put this on the same sticky note. If the bounce continues, that's the caveat. And we're going to keep this video short and sweet today, the last one of the year. I want to make sure that I've told everybody how much I appreciate each and every one of you. Without you doing these videos, running this business, having as much fun as we have, on a daily basis, reading the market, analyzing the market, trading the market, looking at the market cross-eyed. We couldn't do this without each and every one of you. I want to thank you for another great year. Looking forward to 2023. Back on Tuesday in uniform, ready to go. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.